Okay, so today I wanted to share my 2025 investment plan. I'm going to share where I'll be investing, how much I plan on investing, and I'm also going to share some of the rationale behind those decisions throughout the video too. However, do bear in mind that this video is for educational purposes only and should not be construed as financial advice. Nothing within this video is an investment recommendation, and when you are investing, be sure to go and do your own research before you make any kind of investment decision. Now, before we dive into my investment portfolio and the plans for the year ahead, first, I thought I'd give a little bit of context about myself. So I'm 29 years old. I've been investing since 2017. I'm a homeowner. I don't have any personal debt with the exception of a student loan. And I'm also a director of 2 limited companies. I feel like it's important to say this because it gives you an insight into why I'm able to invest, along with why I do so in the way that I do. As always, personal finance is personal to everybody, but hopefully this kind of demonstrates that I've looked to get my own personal finances in order first before I dived headfirst into investing. So with that in mind, now let's dive into my portfolio and the plans for it. Starting off with my first stocks and shares ISA, which I hold with Trading 212. Now, for those new to investing, a stocks and shares ISA is a tax-free investment account where you can invest up to £20,000 per tax year. Now, there's lots of different reasons why I use Trading 212, but one of the reasons is because you can invest in all different kinds of asset classes, from equity ETFs to individual stocks, to fixed income ETFs, and even real estate investment trusts, and much more. And there are no account fees and there are no commission fees for making investments. The only fee, if you like, that's relevant to me based on my own personal investments is the FX fee on foreign transactions, or foreign investments, if you like. That is 0.15%. Just for the sake of awareness, though, there are other fees that are applicable to making investments, like some of the government taxes and levies which are in place. But generally speaking, they're an extremely low-cost broker, which is why I like to use them. And just for the sake of clarity, the reason why I use the Trading 212 ISA account versus the Trading 212 Invest account is because the ISA account is that tax-free one, whereas the Invest account is subject to capital gains tax and dividend tax. Now, if I'm trying to make the most of this tax-free investment account, I've been able to grow my Trading 212 stocks and shares ISA balance to £68,605.66. Albeit, as you can see today, we are down quite substantially because the stock market has taken a little bit of a turn for the worst. But admittedly, over the past 12 months or so, it's done pretty well, returning a rate of return of 42%. Now, in this account, it's made up of an allocation of 36% in diversified funds and 64% in individual stocks. And this is quite aggressive, and it's largely thanks to the rate of return that I've seen from the individual stocks that I've invested in throughout 2024. However, this is kind of now getting a little bit more towards the higher risk end of my overall risk appetite, and I would like to kind of rebalance the books, if you like, to have a little bit more exposure to diversified funds versus that of having more of my eggs in individual stocks. I did do a little bit of rebalancing at the end of the year, and I did sell some of my individual positions, not all of them, just a portion of the profit, and did start to reallocate those funds into the diversified fund. However, I think I need to do a little bit more of it. I do very much have the mindset with all of my investments, they're all for the long term, and it's very much a set it and forget it. However, in order to stay aligned to my overall risk appetite, then sometimes I need to do a little bit of rebalancing too. And that's just part and parcel of overall portfolio management. Now, in terms of my goals for 2025 for my Trading 212 ISA, I would love for this account to surpass £85,000 in portfolio value. And the reason for that is because it would take my total stocks and shares ISA portfolio value to over £100,000. And I'll show you the other account that I've got in just a moment's time. Now, in order to be able to do this, I've got to kind of do it in only 2 ways. The first way is through my own contributions. I'm going to continue to contribute solely to my Trading 212 ISA account for 2025, and I'm going to look to increase the contributions that I make this year versus what I was able to achieve last year. In 2024, I managed to invest roughly about £700 a month, which was pretty good. However, in 2025, I would like to slightly push that number a little bit higher to roughly about £833 a month in order to get me to about a £10,000 contribution for the year. This will mean I'll use up about 50% of my £20,000 ISA allowance, which means that I'm still nowhere near contributing to the full amount. I would love to max out this ISA allowance every single year because it is a case of you kind of either need to use it or lose it. but I'm just not quite there yet. So if the market returns £0 and 0 pence this year, just based on 10 grand's worth of contributions, the portfolio will be valued just shy of about 80 grand. So only about £5,000 off my target. So the only other way to reach that target is through point number 2, which is market returns. Now I will say market returns are absolutely impossible to predict. Here are the market returns that have been forecasted from all of the major investment banks for 2025. And as you guys can see, not even they can agree based on all of the complex financial modeling that they have available to them. The market could of course go up, but it also could go down. And of course, when you're investing, your capital is at risk. But if I can achieve roughly about 6 or 6.25% returns on this portfolio this year, then that will roughly take me to that £85,000 goal. And obviously tip me over that ISA balance of £100,000, which would also be pretty cool. Now I reached out to Trading212 to see if they'd be interested in sponsoring this video, and they kindly agreed to do so. And they've also said that they will offer all of my subscribers one free share valued up to £100 when you click on the link down in the description below and open an account with them and just deposit £1. Or alternatively, if you have already opened an account with Trading212 in the past 10 days, then if you type in the promo code Mitch, you'll also be able to claim that one free share valued up to £100 too. So thanks so much for Trading212 for sponsoring this video. Next up, let's talk about my other stocks and shares ISA account, which I have with Vanguard. Now this is the other pot of money that I mentioned just a little bit earlier, which is valued at £16,801, where we've got returns of just over 155%. Now just for full transparency, this portfolio I've been building up since 2017, but it's actually been left dormant since about 2020 when I started to invest over on Trading212. Now you might be wondering, well, why do you have two different ISAs in two separate places? And truth be told, it's just because I literally haven't done the admin to move my stocks and shares ISA away from Vanguard and simply move it over onto Trading212. And to be honest, because I've got my SIPP now with Vanguard too, which I'll tell you about in just a minute, I might as well just leave both of the accounts both within the Vanguard platform. Now in terms of what's in this stocks and shares ISA, if I just click into it and scroll down, you'll be able to see that I am fully invested in an S&P 500 ETF, which is the distributing version, which means that the dividends get paid to me in cash when they're paid out on a quarterly basis. Now, the S&P 500 is simply just the top 500 companies in the United States of America, and it gives me broad diversification across the US stock market. It's what I invest in over on Trading212 too, but would you believe it's actually cheaper to invest in Vanguard funds over on Trading212 than it is over on Vanguard, because there are obviously no account fees on Trading212, whereas on Vanguard there unfortunately are. And unfortunately for investors on the Vanguard platform, as at the 31st of January 2025, new account fees are going to take effect, where they're essentially charging £4 a month in account fees for balances under £32,000, which makes it quite a high cost in terms of overall investment fees. This does make other low-cost platforms like Trading212 an attractive alternative, especially if you're just kind of starting out and you want to keep your investing fees to a minimum. But because my combined account value on Vanguard is now over £90,000, this change in fees won't actually affect me personally. But it is one to be mindful of if you are a newer investor just starting out, because you do preferably want to keep those account fees and the fees associated with investing to an absolute minimum. So that's my other stocks and shares ISA account. So now let's talk about my other account, which I have on Vanguard, which is my self-invested personal pension. Now, a self-invested personal pension, also known as a SIPP, kind of works in a similar way to a workplace pension, where you can essentially use it as a pension pot to take money from, either in the form of a lump sum or perhaps even an income, once you reach the minimum pension age. One of the big differences though with the SIPP versus a workplace pension, with the SIPP I actually manage it myself, whereas with the workplace pension that I had previously, that was managed by some kind of fund manager, I think with Willis Towers Watson. Now just to provide some additional context here, in mid-2024 I quit my full-time job, and when I did that I obviously had to move my workplace pension away from my old provider and move it over to a SIPP so I could still look to contribute to a pension for my future. And now because I'm a director of my business can actually fund my pension account or my SIPP. There are some tax advantages to doing that through a limited company, but if you do have a limited company, I'll leave that down for your accountant to explain to you in terms of all of the details. Now, for me, my pension pot is more than just a pot of money invested for my future. In actual fact, I see it as more of a freedom fund. This, along with all of my other investments that I've mentioned in this video, I'll hopefully be able to live off one day. So it's definitely one that I take super seriously and one that I try and look to contribute as much as I can every single month. And as of right now, I've been able to build up my SIPP to an account value of just shy of £75,000 with a rate of return of just shy of 12%. And currently, I'm contributing £1,000 a month to my SIPP, just depending on the overall performance of the business. Although, whilst preparing for this video, I did realize that I actually forgot to contribute anything to my SIPP last month, so I've had to double up this month and invest £2,000 instead of the usual £1,000. Now, in terms of what I'm investing in, again, not investment or financial advice, but I'm currently investing in a FTSE All-World ETF. And you might be wondering, well, why do I have two different variations of the same fund within this account? And I don't know if anybody else has found this, but when I transferred my pension, I was able to transfer it into the VWRP, which is the accumulation fund. However, since I've been kind of doing it DIY, that fund option doesn't seem to be on my list. So I've been putting the money into the VWRL instead, which basically distributes the dividends to me, as opposed to kind of reinvesting them back into the fund itself. To be honest, it doesn't really make a difference because I'll just reinvest those dividends anyway. And the reason why I've gone for this kind of all-world equity fund is because, well, nobody really knows what's going to happen in the stock market next week, next month, or next year. And because my ISA accounts are very much solely focused on the US stock market, these kind of all-world funds give me exposure to the global markets. So it adds that element of diversification into the portfolio, which I didn't previously have. Now, I will say at the moment, because I literally have sole exposure to equity markets across my stocks and shares ISAs and my pension, it's very much a higher risk strategy, which is one that I am comfortable with right now based on my kind of age and investment time horizon and my risk appetite. However, this is something that will likely change as I become older and potentially as I get closer to retirement age, where I may start to move some of those investments into either bonds or cash equivalents and just generally lower risk investments. So that's my pension, but the next investment that I'm going to share with you is going to be without doubt the biggest investment that I make within 2025. And that investment is into my property portfolio. Now, for some context, I bought my very first investment property right the way back now in 2023. I did make a video on the channel about it at the time, which I'll put in the description below if you guys want to check out. But over the last 18 months or so, I've been saving as much money as I can in order to buy another one. And I'm glad to say at the end of 2024, I agreed the purchase of my second investment property, which is a 2-bed flat, which I'm hoping will rent out between £950 and £1,000 per calendar month. It's still going through with solicitors at the moment, but I'm hoping that I can get completed on it before the end of Q1. There are a few different reasons why I personally like investment property, but probably one of the biggest ones is that I see it as almost like a way of buying into early retirement. First, let me layer in some context as to why this works for me personally, and then we'll talk about some of the figures. So as you guys know, I run this YouTube channel full time, and because it's a very high profit margin business, I retain about 85% of my earnings every single month. Now, admittedly, I could just pay myself more money and therefore pay more tax, or I have decided with my accountant to actually move money away from my YouTube business into a different company which has the sole purpose of buying investment properties. This has been a way of allowing me to invest that money that I have in order to provide me with an income and potentially capital growth in the future, as opposed to kind of paying it to myself, paying even more tax, and then even potentially having that money sat in my own personal bank account getting eroded by inflation, or even perhaps me wasting it and spending it. So now let's talk some of the figures as to why I've decided to invest the surplus cash that I had in my business account. The first one being, in the last decade, the average UK property price has actually risen by 51.8%. So it's close to about 5% a year. Now, the current value of my two properties will be about £300,000. So let's say, hypothetically speaking and conservatively speaking, that those properties grow at a rate of 2.5% per year instead. That means on paper, based on capital growth, I'll be making about £7,500 a year. And the second reason is that on top of the capital appreciation, I'm obviously going to be getting monthly cash flow via the rent, which can be an income for me in later life. And of course, that rent also kind of goes up with the rate of inflation too. So my one flat currently rents out right now for £895 per calendar month. And let's just say conservatively that I'm able to achieve £950 a month on the new flat that I've purchased, which should complete at the end of Q1. Now, assuming rental rates go up at a conservative 2% a year, but in recent history, they've gone up as much as 10% in a single year, then based on those numbers, if I plan to retire at, say, like 55 years of age, which is 26 years or so from now, at that time, all of the mortgages will be paid off and I'll be earning an income of £3,102. Now, obviously, we do have to inflationary adjust that number because 3 grand 26 years from now will not be the equivalent to £3,000 today. But that still will be an additional income source pre-tax, which comes into my account like clockwork every single month, providing that I don't have any issues with the tenants. Now, I'm super fortunate to be able to say that I can use some of the money that I've made from this YouTube channel to fund some of my investments. So a big thank you to you guys for continuing to watch the content. And I'm hopeful that over time from making those investments that it will allow me some kind of financial freedom and that I don't need to keep working until the state pension age, which is currently 68 years old. Fundamentally, though, all of the investments that I'm trying to make in 2025 and the goals I have for 2025 are simply in order to achieve two things. Number one is to increase my overall net worth through capital appreciation so I can draw an income from that value at a later date. And the second one being to provide an income for myself for me to live off, allowing me to retire early and not needing to rely on a state pension. So if you did enjoy this video, be sure to subscribe to the channel as well. YouTube thinks that you should check out this video next. And with that being said, see you over in the next one.